Test 5, Brokerage Business, Sale Contracts 5.1 Which of the following business entities is generally prohibited from brokering real estate? A. Sole proprietorship. B. Partnership. C. Corporation for profit. D. Nonprofit corporation. 5.2 A joint venture may generally broker real estate if the co-venturers A. Form a business trust. B. Form a cooperative association. C. Are properly licensed. D. Are limited partners. 5.3 A licensed salesperson may work only for a client who has signed a listing agreement with a licensed broker. B. A single employing broker who has an active broker's license. C. A client who has signed an authorization agreement with a licensed salesperson. D. An employer who has an active or inactive broker's license. 5.4 Which of the following activities is a licensed salesperson allowed to engage in? A. Accept a listing that is in an associate's name. B. Accept a commission directly from the MLS. C. Offer a property for lease on behalf of the employing broker. D. Sign a contract with a management company on behalf of a client. 5.5 If a salesperson has worked on a completed transaction that involved a listing agent, a selling agent, and several subagents for each of these, from whom will the salesperson receive any compensation that is due? A. The listing agent. B. The selling agent. C. The seller. D. The employing broker. 5.6 A property has sold for $380,000. The listing agreement calls for a commission of 6.5%. The listing broker and selling broker agree to share the commission equally. What will the listing agent receive if the agent is scheduled to get a 40% share? A. $4,445. B. $3,556. C. $2,667. D. $4,940. 5.7 A real estate salesperson finds a buyer to a for sale by owner property. The home sells for $245,000, and the seller agrees to pay a commission of 3%. The salesperson is on a 65% commission schedule with her broker, who pays her 65% minus office expenses of $500. How much will the salesperson receive from this transaction? A. $4,778. B. $4,452. C. $4,278. D. $3,175. 5.8 A salesperson makes a listing presentation to a home seller and obtains a signed listing agreement. The first thing the salesperson must now do is A. Make a final pricing determination for the property. B. Negotiate the commission with the client. C. Complete the signing of the listing. D. Explain the agency relationship to the client. 5.91 shows a customer a property that is listed by another brokerage firm. He obtains an offer that is $5,000 less than the listing price. How should one deal with this offer? A. Advise the buyer that the offer will be rejected. B. Present the offer to the seller at the earliest possible moment. C. Ask the listing broker to lower the listing price. D. Counter the offer. 5.10 A broker receives an earnest money deposit from a buyer and signs the check over to the listing agent as a partial commission advance. What is wrong with this procedure? A. Nothing, provided the deposit clears the bank and doesn't bounce. B. The broker and the agent are guilty of price fixing. C. The broker has illegally converted security funds for business use. D. The agent may not be able to return the advance if the transaction falls through. 5.11 Under what circumstance may a property listed for sale with a brokerage be advertised without identifying the broker? A. When the salesperson is an out-of-state licensee. B. When the ad is restricted to the brokerage's website. C. When the advertisement is a silent ad. D. Never. 5.12 Competing brokers in a county seat agree on a standard commission rate for principals within the county. This is a possible violation of A. Fair trade and antitrust laws. B. The statute of frauds. C. Contract law. D. The Uniform Commercial Code. 5.13 What is co-brokerage? A. An owner agent and a buyer agent combine efforts to complete a sale. B. Outside brokers assist a listing agent in procuring a buyer. C. An owner or buyer lists with several brokers to complete a transaction. D. Agents from a single agency cooperate to generate listings for the broker. 5.14 Which of the following may associate his or her name or title with the term realtor registered? A. Any active or inactive broker in the country. B. Any duly licensed, active agent or broker. C. Any member in good standing in a properly chartered real estate trade organization. D. Only members of the National Association of Realtors registered. 5.15 Real estate sales agents are legally authorized to A. Represent their employing broker in procuring clients and customers. B. Act directly on a client's behalf to discharge the broker's listing responsibilities. C. Negotiate and execute contracts for sale on behalf of the client. D. Take on the listing responsibilities for other listings in MLS. 5.16 How does the position of an independent contractor licensee, IC, differ from that of an employee licensee? A. The IC is responsible for his or her own taxes, the broker does not withhold. B. The IC must obtain his or her own training, it is not provided by the broker. C. The employee is not entitled to company benefits. D. The IC must abide by all office meeting schedules. 5.17 A salesperson's commission rate and structure is established by A. State regulation. B. Competitive conditions. C. Agreement with other brokers in the market. D. Negotiations with the client. 5.18 In obtaining offers from a buyer, an agent must be careful to A. Pursue only those offers which are at or near the listing price. B. Balance the owner's price expectations with the buyer's opinion of value. C. Avoid disclosing what price the owner will accept. D. Avoid completing offers that are beneath market value. 5.19 Commingling is the practice of A. Blending escrow funds on a number of properties in one escrow account. B. Mixing socially with prospects at open houses or other marketing functions. C. Allocating commission funds from a transaction for use in the agency's business. D. Mixing escrow funds with the broker's operating funds. 5.203 Leading agencies charge identical commission rates for brokering office properties in Phoenix. Based on this information alone, which of the following is true? A. There is insufficient evidence of anything other than a normal business practice. B. The brokers have engaged in legal collusion. C. The brokers have allocated the Phoenix market. D. The brokers have illegally fixed prices. 5.21 A real estate sale contract is an executory contract until a. The completed sale transaction is recorded. B. The buyer and seller have agreed to all provisions and have signed the contract. C. All the obligations and promises are performed and the transaction is closed. D. The loan has been approved, the title insurance has been obtained, and the closing date is set. 5.22 In assisting a buyer or seller to complete an offer to purchase, what should an agent do to reduce the risk of committing an unauthorized practice of law? A. Use a standard contract promulgated by a state agency or a real estate board. B. Observe ethical standards promulgated by real estate trade organizations. C. Offer legal advice only on points of the contract that the agent is absolutely certain about. D. Write contract terms that are fair to both buyer and seller. 5.23 To be enforceable, a contract for the conveyance of real estate must a. Be acknowledged by witnesses. B. Be written. C. Be recorded. D. Have an expiration date. 5.24 A buyer makes an offer to purchase a house, and the seller accepts the offer. However, before the salesperson can inform the buyer of the seller's decision, the buyer delivers a written notice that she is opting out and canceling the agreement. At this point, which of the following is true? A. The contract has been legitimately cancelled and is null and void. B. The seller must give the buyer an opportunity to make a new offer. C. The buyer must perform under the terms of the contract. D. The seller must notify the buyer in writing that the buyer is in default. 5.25 Which of the following is an essential element of a valid contract for the sale of real estate? A. A valid blank form that the contract is written on. B. A habitable property. C. An offer and acceptance. D. A marketable title. 5.26 What kind of interest does the buyer acquire once a real estate sale contract is signed by the principal parties? A. Legal title. B. Lienholder interest. C. Reversionary interest. D. Equitable title. 5.27 A contingency in a sale contract is a promise by buyer or seller to perform a specific action. B. A condition that, if unmet, renders the contract unenforceable. C. One of several alternative actions that buyer or seller may take to satisfy contract requirements. D. An optional, unilateral action that either party may take at the request of the other party. 5.28 A clause in a sale contract stipulates that the seller must provide evidence that the property is free of active termite infestation. On the day of closing, the buyer learns that inspection service did not provide the required written documentation. The buyer then proceeds to declare that the sale is off. Which of the following is true of this situation? A. The seller can sue for specific performance. B. The buyer will be in default, and liable for damages, if he does not complete the transaction. C. The buyer may be able to have the contract cancelled. D. The contract is automatically void. 5.29 A buyer signs an earnest money agreement and gives it to the broker who showed her the property she is buying. After leaving the broker's office, she reconsiders and decides she prefers a different property. How long does she have to take back her offer? A. Until the seller communicates acceptance of the offer. B. Until the earnest money deposit check is cashed. C. She can take it back at any time, but must forfeit the earnest money. D. She cannot take it back until after the expiration date of the offer. 5.30 On Wednesday, Fred offers to sell his property to Jack for $275,000, with the offer to remain open until 5 p.m. the next day. On Thursday morning, Sally offers Fred $280,000 for the property and Fred accepts. At 1 p.m. on Thursday afternoon, Jack accepts. Which of the following is true of this situation? A. The acceptance by Sally creates a contract and terminates Fred's offer to Jack. B. Fred has entered into contracts with both Jack and Sally to sell the same property. C. Fred's acceptance of Sally's offer is invalidated by Jack's acceptance, because Fred's offer to Jack was made prior to Sally's offer to Fred. D. No contract has been created because it is impossible to have two valid sale contracts for the same property. 5.31 Among the items that normally must be disclosed in a sale contract or its addenda is /are the A. Buyer's financial capability. B. Buyer's source of funds for the down payment. C. Seller's acceptable price range. D. Agency relationships and property condition. 5.32 To create an enforceable option to buy contract, there must be an exchange of a promise to sell and a promise to buy. B. Valuable consideration and a right to buy. C. Valuable consideration and a promise to buy. D. A down payment and a post-dated contract for sale. 5.33 Mary Carboy buys a house from Jim Schmidt and at the same time obtains an option to purchase the adjoining vacant lot for $10,000 within 1 year. A few months later, Carboy informs Schmidt that she is ready to exercise her option, but finds that Schmidt has received an offer of $12,000 from another party. Schmidt states that he will accept the offer unless Carboy is willing to match the $12,000 offer. Which of the following is true of this situation? A. Schmidt must sell to Carboy for $10,000. B. Carboy must pay $12,000 or lose the property. C. Schmidt may sell to Carboy or the other party, but the price cannot exceed $10,000. D. If the other party delivers payment before Carboy does, the option is cancelled. 5.34 Which of the following is true regarding the assignability of an option? A. It is assignable only if the contract specifically allows assignment. B. It is never assignable. C. It is assignable only if the option is exercised. D. It is always assignable unless the contract prohibits assignment. 5.35 Which of the following is true of a contract for deed transaction? A. At the end of the contract period, the vendee receives equitable title, provided all required periodic payments have been made. B. The vendee has no right to possess or occupy the property during the contract period. C. At the end of the contract period, the vendor conveys legal title, provided the vendee has fulfilled all obligations. D. The vendor may cancel the contract at any time before the final payment has been received. 5.36 Several buyers are competing for the last available home in a desirable new subdivision. One buyer calls the owner-developer directly on the phone and offers $20,000 over and above the listed price. The developer accepts the offer. At this point, A. The parties have a valid, enforceable sale contract on the home. B. The parties have completed a verbal, executory contract. C. The parties may not cancel their contract. D. The developer could not entertain other offers on the property. 5.37 An owner completes a sales contract on her property with a buyer. Before closing, the seller runs into financial trouble and assigns the contract to her principal creditor. The buyer cries foul, fearing the property will be lost. Which of the following is true? A. The buyer can sue the assignee to disallow the illegal assignment. B. The buyer can take legal action against the assignor. C. The assignor has completed a legal action. D. The sale contract is nullified. 5.38 A due on sale clause in a sale contract puts parties on notice that A. The full price of the property is due the seller at closing. B. Any loans surviving closing become immediately payable. C. All of the seller's debts must be retired before or upon closing. D. Any conveyance may trigger an acceleration of any loans secured by the property. 5.39 A tenant has an option to purchase agreement with the landlord that expires on June 30th. On July 1st, the tenant frantically calls the landlord to exercise the option, offering the apology that she was busy with a death in the family. Which of the following is true? A. Since options contain grace periods, the landlord must sell. B. The tenant loses the right to buy, but can claim the money paid for the option from the landlord. C. The landlord does not have to sell, but must renew the option. D. The option is expired, and the tenant has no rightful claim to money paid for the option. 5.402 Parties enter into a contract for deed agreement. In this form of agreement, A. Title is conveyed to the buyer, but the seller retains possession for a stipulated time period. B. The buyer contracts to pay all cash at closing in exchange for the deed. C. The seller retains legal title while the buyer makes partial payments until the contract is fully executed. D. The buyer immediately acquires legal title and takes possession. Test 6.